All right, welcome to our deep dive into Palantir Technologies. Today, we're going to be looking at Palantir, trying to figure out if it's, worth all the hype or if it's actually like a really risky gamble. And our guide for this is actually going to be a Motley article. And what's interesting about this article is the author clearly loves the idea of Palantir, but ultimately he decides not to invest, at least not yet. So we're going to figure out, what's holding him back from that. Now, just as a really quick overview, Palantir, they build software to help businesses and governments make better decisions. And that's potentially a huge EE market. We're talking like $119 billion. So a lot of potential here.
Yeah, it's interesting that conflict that the author has, right? They clearly like the idea of Palantir, but they're hesitant about the investment itself.
Yeah.
And that tells us, that there's a puzzle to solve here. That's what makes this deep dive so exciting.
Absolutely. Okay, so before we get into the nitty-gritty, let's just talk about Palantir's performance. I mean, 276.53% growth year-to-date as of November 25th, 2024, and 236.53% in the past year alone. So, seriously impressive numbers. It makes you wonder, did the author miss out by not investing yet?
It's tempting to look at those numbers and think, wow, easy money, right? But you got to remember, context is everything. Palantir only went public in 2020.
Yeah.
So yeah, the past 2 years have been amazing. But they did have losses in 2021 and 2022. It's like, it's like a brand new sports car, sleek, powerful, but you don't know if it's going to break down after a few miles.
Yes, maybe not a sure thing then. The article's author even admitted to not being an AI expert. And honestly, I'm in the same boat. Makes it kind of hard to judge a company in a field you don't fully understand.
Yeah, absolutely. It's like trying to invest in a company that makes microchips without understanding what a microchip actually does. And AI, it is complex, right? But you don't need a PhD to get the basics. At its core, AI is about training computers to do things that usually require human intelligence. Things like learning, problem solving, making decisions. And this has huge implications for businesses and governments, from streamlining operations to making better predictions.
Okay, so instead of replacing human intelligence, it's more like a tool to boost our own capabilities. But even with that basic understanding, figuring out if a company like Palantir is actually a good investment, it kind of requires looking beyond just the tech itself and more into the financials.
Right, and this is where it gets interesting. The article dives deep into Palantir's valuation, and that's where some potential alarm bells start ringing.
Okay, so let's unpack those numbers. The article uses all these terms like price-to-sales ratio and forward-looking PE ratio, which, can sound a bit like financial gibberish, especially if you're not super familiar with these terms.
Yeah, don't worry, we'll translate. So think of the price-to-sales ratio like this. It compares a company's stock price to its actual revenue. And a high ratio suggests that investors are betting on future growth, even if the current sales are modest. Now, Palantir's ratio is 58.8. which is a lot higher than the average for the entire market.
Wow, that's a big difference. So investors are really optimistic about Palantir's future. But is it like too much optimism? What about the other ratio, the PV ratio?
Right, so the PE ratio, or price to earnings ratio, tells us how much investors are willing to pay for every dollar of profit the company actually makes. And Palantir's forward-looking PE ratio is almost 140. Now, to give you some perspective, the average for the U.S. stock market is more than 12 times lower. We're talking a significant difference.
So Palantir is definitely priced for huge future growth. But what if that growth just doesn't materialize as quickly as everyone expects? It seems like a pretty big risk.
Exactly. And to really drive that point home, let's compare Palantir to some other tech giants you're probably familiar with. So NVIDIA, they're a powerhouse in the graphics card and AI chip market. They have a market cap of $3.3 trillion. That's the total value of all their shares. But their forward PE ratio is only 32.3. And similarly, Amazon, a company known for its incredible growth rate, has a market cap of $2.1 trillion and a forward PE of just 32.8.
Okay, so Palantir, with its $150 billion market cap, is valued way higher relative to its earnings than these other established giants. It seems like investors are expecting something truly extraordinary from Palantir, and that's kind of unnerving.
It is. And to put that $150 billion figure into perspective, that's actually bigger than the combined market value of several other companies like Target, Ford, Southwest Airlines, and Best Buy altogether. So it makes you wonder, is that optimism justified?
Hold on. So we're talking about a company specializing in AI software. That brings in only $3 billion a year, and it's valued higher than these massive, well-established companies combined. This is getting more intriguing by the minute.
It is, isn't it? And while this doesn't automatically mean that Palantir is overvalued, It definitely raises questions. Are investors just getting caught up in the AI hype,
Yeah.
pushing the price beyond what's realistically sustainable? That's what we need to figure out.
Yeah, and speaking of things that make you go, the article mentions something else that's super interesting. It seems that a bunch of billionaires have been selling their Palantir shares recently. Doesn't exactly scream buy now, does it?
It's definitely a red flag worth investigating. Billionaires, they don't always make the right calls, but they tend to have a good understanding of the market. So why are they selling? Are they simply cashing in on the hype, or are they seeing something that's making them nervous?
Okay, so we've got this company. Amazing technology, sky-high stock price, and some seriously wealthy people heading for the exits. This is getting more and more like a detective story, and we're just getting started.
Exactly. We've got a lot more to uncover. So stay tuned for part 2 of this deep dive. We'll dig deeper into Palantir's business model, competitive landscape, and what this all means for you as a potential investor.
All right, see you in part 2. Welcome back to our deep dive into Palantir Technologies. So far, we've uncovered some pretty interesting clues. Incredible growth, but also some potential red flags, like those billionaires selling off their shares. It makes you wonder what they know that we don't.
Yeah, it's like they're whispering something's up. But we got to figure out what exactly that something is. And remember, investing is all about managing risk, even if Palantir is revolutionizing industries. If the investment itself is too risky, it might not be right for you.
Okay, so let's channel our inner Sherlock Holmes and examine those red flags a bit closer. The author talked about staying within his circle of competence, which basically means sticking to industries he understands. He loves the idea of Palantir, but AI is a bit outside his expertise. And I have to admit, I feel the same way.
Yeah, it's a smart principle. Think of it this way. Would you buy a house without understanding the local real estate market? Probably not. The same goes for investing. If you don't get the industry, it's like navigating a maze in the dark. You might get lucky, but you're more likely to just bump into a wall.
So how do we expand our circle of competence when it comes to AI? I mean, I'm not going back to school for a computer science degree just to understand Palantir.
You don't have to. There are tons of resources out there. Start with the basics. What is AI and how is it being used in different industries? There are great articles, videos, even podcasts that explain this stuff in plain English. You can also look at industry reports, follow reputable tech news sources.
So it's about doing your homework, basically. But even with all the knowledge in the world, investing can still feel emotional, right? It's easy to get caught up in the hype, especially when you see those numbers like Palantir's stock performance. How do you stay rational when your gut is screaming, buy, buy, buy?
Having a solid investment strategy is key. Before you even think about buying a stock, ask yourself, what are my financial goals? How much risk am I comfortable with? And how long am I willing to hold this investment? Having those answers will help you make decisions based on logic, not emotion.
So like having a financial roadmap. You know where you want to go and how you're going to get there. That way you're less likely to get sidetracked by the shiny objects along the way.
Exactly. And remember, investing should be a long-term game. Short-term market swings are normal. Don't panic and sell just because the price dips. If you've done your research and you believe in the company, stay the course.
Okay, that's reassuring. So let's get back to Palantir. If someone is seriously considering investing in this company, what are the key factors they should be looking at beyond just understanding AI?
Well, they need to dig deeper into Palantir's specific business model. What are their main revenue sources? How sustainable are those sources? Who are their competitors? And what makes Palantir actually stand out from those competitors? And of course, what are their plans for future growth?
So it's about going beyond the hype and looking under the hood, so to speak. What about their reliance on government contracts? It seems like it could be both a strength and a weakness.
That's a great point. Government contracts can provide stability. They can provide long-term revenue streams, but they also come with risks. What happens if government priorities shift or if budgets get cut? Those are questions a potential investor needs to consider.
Okay, so gotta assess the stability of their revenue streams. But let's be honest, not everyone has the time or the expertise to analyze a company's financials like a Wall Street analyst. What's a good starting point for the average investor?
We'll look for reputable sources of information. Read financial analyst reports. Check out independent research firms' assessments. Even dive into articles from trustworthy financial publications like the Motley, for example. It's like having a team of experts helping you understand the company from different angles.
So it's about gathering information from multiple sources and forming your own informed opinion. But even with all that research, there's always some level of risk involved, right?
Absolutely. No investment is completely risk-free. But the key is to understand and manage that risk. By carefully examining a company's fundamentals, its valuation, and the broader market context, you can make smarter decisions and increase your chances of success.
So it sounds like investing in a company like Palantir, it requires this delicate balance of excitement and caution. You need to be intrigued by the potential, but also clear-eyed about the risks.
That's a perfect way to put it. Don't let fear paralyze you, but don't let the hype blind you either. Informed decisions are the best decisions.
All right, so we've covered a lot of ground, but I have to ask, what would you do if you were considering investing in Palantir?
That's a great question. And honestly, the answer would depend on my individual circumstances and risk tolerance. But one thing I definitely do is delve deeper into the specifics of their government contracts. Are those contracts stable? How much competition is there for those contracts? What's the likelihood of renewal? Those are crucial factors to consider.
So even for an expert, it's about going beyond the surface and digging for those details that could make or break the investment. Makes sense. Now, I can't wait to hear what our listeners think about all this. All right, welcome back to the final part of our deep dive into Palantir Technologies. It's been quite a journey. We've explored the allure of their AI technology, dissected their eye-popping valuation metrics, and even uncovered some red flags that made us think twice.
Yeah, we've been like detectives piecing together the clues, trying to figure out, is Palantir a hidden gem or is this a potential trap?
Yeah.
And now it's time to put all those pieces together and see what picture they paint.
Right. We've talked a lot about the company itself, but let's shift gears for a moment and talk about you, the listener, because at the end of the day, this deep dive is about helping you make an informed decision.
Absolutely. Investing isn't about blindly following the crowd or chasing the latest hype. It's about aligning your investment choices with your individual circumstances, your financial goals, your risk tolerance.
Okay, so let's recap what we know about Palantir. They're operating in a potentially lucrative field, AI. Their stock performance has been absolutely incredible. But those sky-high valuations, they raise some eyebrows. And then we have those billionaires selling off their shares, which just adds another layer of intrigue to the story.
It's a complex picture. There's no easy answer.
Yeah.
So if you were considering investing in Palantir, what additional research would you do? What factors would weigh most heavily on your decision?
That's the million-dollar question, isn't it? For me, I'd want to understand the competitive landscape better. Are there other companies out there doing what Palantir does, maybe even doing it better? Or are they truly unique in their approach?
Yeah, that's a great point. Competition's always a key factor to consider. A company might have a great product or service, but if they're facing really fierce competition, it could really impact their profitability and growth potential.
Right. And speaking of potential, one thing that really struck me was the size of Palantir's potential market. I mean, we're talking $119 billion. But potential doesn't always translate into actual results, right?
Exactly. It's like having a map that shows a giant treasure chest buried somewhere on a vast island. The treasure might be real, but actually finding it is another story altogether.
So it's not just about the size of the market, it's about Palantir's ability to actually capture a significant share of that market. And that depends on a lot of factors, like their sales strategy, their marketing efforts, their ability to innovate and stay ahead of the competition.
It's a multifaceted challenge. It requires a deep dive into their operational efficiency, their ability to scale their business. Do they have the infrastructure? Do they have the talent to handle rapid growth? These are all crucial questions for potential investors to consider.
So we've gone from a simple question, is Palantir a good investment, to this whole series of complex questions about their business model, their competitive landscape, their growth strategy. It's like peeling back the layers of an onion, and each layer reveals something new and potentially surprising.
That's the beauty of a deep dive. You're going beyond the surface and really understanding the nuances of a company and the factors that drive its success.
And as we wrap up this deep dive, I want to leave you, the listener, with one final thought. Investing is a journey, not a destination. It's a continuous process of learning, adapting, and making informed decisions based on your individual goals and your risk tolerance.
And remember, even the most experienced investors don't always get it right. The key is to learn from your mistakes, stay informed, and never stop asking questions.
So thank you for joining us on this deep dive into Palantir Technologies. We hope it's given you the knowledge and the insights to make your own informed decisions about this very intriguing company.
Happy investing.